I'm Doris. I'm here to show you about my stock account. Today, my stock account has made a loss of $763. U.S. stocks closed down as the Dow Jones erased gains last year after the banking crisis weighed on the index. So let's first take a look at my account. Today, United Natural Gas made a loss of 3.17% to $6.11, and right now the net asset of my account is $70,000. Today's market generally closed down. Dow Jones Industrial Average closed down 0.86% to 33,127.74. Nasdaq Composite closed down 0.49% to 11,966.4. And S&P 500 closed down 0.72% to $4,061.22. Today, entertainment and asset management all closed down of more than 2%. The banking industry is also closed down by more than 1%. The Dow has erased its year-to-date gains. Investors are still assessing the Fed's outlook for monetary policy. The spread of the regional banking crisis has worried market participants that more banks may fail in the future. Regional bank stocks surged sharply on Thursday amid renewed concern about the health of the U.S. banking system. PacWest Bank shares closed down more than 50% today. California Bank has been evaluating strategic options, including a possible sale of itself, according to a person familiar with the matter. On the negative news of PacWest Bank, other regional bank stocks generally plunged, with Western Alliance down nearly 40% and Zions down more than 12%. Founder of CEO Double Line Capital, the king of new bonds, said troubled regional banks may not have a break before the Fed cut interest rates. Since Silicon Valley Bank collapsed in March, the First Republic has joined the failed banking situation, recently taken over by J.P. Morgan Chase. Mr. Gunlock said, keeping interest rates so high will continue significant pressure on regional banks. I believe that the chances of more regional bank failure are very high. Goodluck was also warned that the chances of a recession are increased and that the Fed may not raise interest rates again after the latest. And the hedge fund giant Bill Ackman also said the U.S. regional banking system is at risk, and more banks may fail in the future. Ackman said the regional banking system was at risk and that regulators' failure to update and expand its insurance system was like putting more nails on the coffin. The bank is a game of confidence at this time. No regional bank can survive bad news or bad data, as share prices inevitably plummet and unsecured deposits are withdrawn. And seeking strategic alternative means the FDIC will close banks over the coming weekend. In addition to the banking crisis, investors are also watching for the Fed's monetary policy outlook. The Fed announced its 10th move on the Wednesday, but the central bank appears to soften its language about the future interest rate raises. But Fed Chairman Jerome Powell said it may be too early to cut interest rates. At a news conference after Wednesday announcing the rate hike, Powell said, the committee doesn't think inflation will fall so quickly. It takes some time, so that forecast is roughly correct. In that world, we will not cut rates. In addition, he said that if the government debt ceiling fails to rise, that would be unprecedented with a high degree of uncertainty and negative impact on the economy. U.S. Treasury Secretary Janet Yellen sent a letter to congressional leaders on Monday, warning that the federal government could hit the debt ceiling and default on its debt as soon as June 1st. Yellen noted, after reviewing recent federal tax revenues, the Treasury estimates that if Congress does not raise or suspend the debt ceiling by early June, it will not be able to continue with all government obligations, and could occur as early as June 1st. On Thursday, the European Central Bank raised its three major interest rates by 25 basis points to 3.75%, in line with market expectation and at the highest level since October 2008. Since the process of raising interest rates began in July, the ECB has raised interest rates sharply 7 times in a row to curb inflation, by a total of 375 basis points. It said it was ready to adjust all its tools to ensure it meets 2% inflation target. The asset purchases are expected to stop reinvestment in July. Future decisions will ensure that interest rates are sufficiently restrictive. Interest rate decisions will be based on the inflation outlook. The ECB said its reinvestment under the asset purchase program would fall by 15 billion euros a month by the end of June 2023. On the economic data front Thursday, the Labor Department reported that U.S. initial claims for unemployment benefits stood at 242,000 in the week ended April 29th, compared with 240,000 expected and 230,000 previously. Another data shows that U.S. non-farm unit labor costs rose 6% in the first quarter from the previous quarter, beating an expectation of 5.5%. That's all I have for today. Thank you for listening. Don't forget to subscribe and like news. See you next episode.